The market has been on an absolute bull run, and we are starting up into earnings season. What is going to happen this week? Riz and I are going to discuss it. Good evening, my fellow Riz Elite members and all of our subscribers on YouTube. Welcome to our Elite webinar. If you haven't met us before, we're part of Riz Elite. We're part of a group of traders who are looking to increase our wealth and make our money work for us so that we can experience financial freedom. And if that is something that you would like to do, make sure you get down there and you click that like and subscribe button. Make sure you click the bell icon next to it to get notified every time we upload a new video or webinar replay here on the channel. And leave us a comment. Let us know what you're watching this week in earnings seasons, because there are a lot of companies that are going to report. Now, we had a really big push this week in the market. We got really close, or actually not really close. We were overbought here. It looks like on Wednesday, we really got pretty high up there on the RSI, right around 74, almost 75. But then we kind of came back Thursday and Friday into the close. Riz, what are your thoughts on this? Is this kind of like some weakness that we're showing here, or is this just a little bit of retracement that really needed to happen?
Yeah, a little bit of a retracement, honestly. I think it's good because the market was significantly overbought. Like we had what seemed like almost nearly 2 full weeks of green candles just going up there. And yeah, no, it's important to have a little bit of a retrace. I don't know how long it will last because we do have a big catalyst coming up with which I'm sure you're going to mention, but we got Fed.
Yeah.
Rate decision, so that's going to be a big one. But again, we'll go into details for that. But so far the market's very, very bullish. In fact, significantly more bullish than it was in June. But when we take a look at seasonality, August is usually, I would say, sort of a flat or a down month. Again, that seasonality doesn't mean it's going to always happen. And for those of you that aren't familiar with seasonality is, and if you're wondering why I'm talking about the seasons, I'm actually referring to historical market moves based on month. So that's essentially what I mean by seasonality, meaning what usually happens from a percentage standpoint each given month in the market. So, you know, if we look back at the past 20 years of S&P 500 data, August is usually a bearish, or like I would say, a flat type of month. Does that mean markets are going to be flat in August or they're going to go down? Not a guarantee, but it is important to at least have that kind of gauge and see how things usually go in past occurrence.
No, it's always good to keep an eye on the past so you understand what the trends typically are, so you can try and position yourself in the right places at the right time. And obviously that's what we're trying to do here in Elite. Of course, all of our Elite members get notified anytime we get in or out of a position. That, of course, is just for our Elite members. And thanks to all of them who came to the live webinar recording this evening. Like you said, Riz, really big push, in the market this week, very bullish. And man, it has been just very perplexing, this market, to say the least. There seems to be so much negative data coming out. Things are bad, but not as bad as we thought they were. But the market just keeps wanting to push. Is this really the time to just go risk off and, throw caution to the wind? Or do you think the traders should be a little more, reserved with their trading just in case the bottom falls out?
Yeah, that's a good question. So I'll tell you what I'm doing, and I'll kind of chime in on my reasoning behind that. So I have gone predominantly cash. I've been mostly cash, again, with a few long positions. And of course, Elite members, as you know my entries live in real time and exits. So I can say I'm over 90% cash. Especially after this week, we took some gains. It was actually a very solid, great week, if I may say so myself. Yeah, I'm happy with how it turns out, but I am a lot more cautious this year. Of course, as we can see, probably from March onwards, we've just been rallying, right? Give or take. So it's kind of worked out for those people that were pretty much bullish and kept their long positions. But our job isn't to just buy and hold and be at the mercy of the markets. We're trying to be a little bit more strategic, more proactive, and kind of see if we can take on risk when the climate, I would say, is suitable, and then take off risk or decrease risk when this climate seems a little bit more, let's say, I would say suboptimal. So I think right now, after this run up and getting close to, the 45.50 area, which is, we were pretty much at 45.50, I think, if I'm not mistaken, on Wednesday, and then we just kind of pull back on Thursday and Friday. So I think 45.50, give or take, was where we were, and then I think even getting to 4600, I think very much could be the case, depending on, again, the catalyst that we're expecting this Wednesday with the Fed. So it's hard for me to gauge. Plus, we also have a large portion of the S&P 500 reporting earnings. Like, we got the heavy hitters, we got the big ones. We had Netflix and Tesla last week, which was interesting, but we got the big ones coming in this week. So that will be very, very interesting to see in how they do this week. These companies do, of course, dictate the kind of the sentiment and risk appetite in markets.
Yeah, definitely something to keep an eye on. Earnings this week, huge catalyst, and of course the announcement coming out of the Fed, which we'll talk about here in just a minute. But let's take a look here at the breakdown for the S&P 500. And Riz kind of alluded to the Netflix earnings, and that seems to have really kind of hit the tech sector a little bit harder than I expected. Really big turnover here in tech, and of course communications coming down with it. And honestly, consumer discretionary as well, also taking a big hit this week. But we see the opposite here in these sectors that are, somewhat beaten down and underperforming. Both these sectors are starting to curl up and make their push back up over the zero line here. We've got healthcare, consumer staples, financials, real estate, all now currently above zero. And the only two lagging indicators that are below the zero right now are energy and utilities, but a really big spike up here in utilities this week. It's interesting, Riz, because we've seen this big push in the market, the S&P 500, the SPY ETF here representing it, but yet we've seen these sectors really kind of tumble, and these sectors kind of moving in an opposite direction. Are we starting to see these sectors recover more? Do you expect that here in the latter part of the year, or do you think that these big three up here are just going to keep running hot?
This is a mixed bag. I think this is also just interesting to see, because not only did we get the weakness in the consumer discretionary, the communications, and the technology, IT's part, it's important to kind of see that, yeah, those Netflix earnings and maybe even Tesla to an extent had an impact. It wasn't just that, but yeah, it definitely did have an impact. We could see that right after market close on Wednesday. But it's interesting to see that the other sectors are actually moving up, and that's classical sector rotation. Really, that's just pretty much textbook sector rotation, where we see risk decreasing or exposure in certain sectors, specifically the tech sector and all that, like I mentioned, and leaving that sector, and then maybe perhaps going into something that's a little bit more stable, a little bit less volatile, and maybe more beaten down, as you can see with utilities, energy, and healthcare, and financials, and real estate, and all that stuff. So a great example for those that were kind of wondering, well, what does Riz mean by sector rotation? And this is literally a very, very good, I would say, a very, very good, clean textbook example.
Yeah, real perfect example here. People selling out, getting out of these sectors and moving into, like what Riz was talking about, a little bit more stable, less growth oriented in some ways. Of course, you can grow in any sector, but obviously tech and communications have just been riding high this year, going absolutely nuts. And so, yeah, we're seeing people jump out of that and jump in here, maybe somewhat at a discount. So that's definitely a good thing if you're getting into those sectors right now, as they do seem to be kind of pushing up a little bit. All right, let's take a look here at the asset classes that we enjoy taking a look at. And we'll start here with oil. And oil has made a bit of a move this week, really kind of closing here right around where we did on Thursday, the 13th. So a week ago, here on Friday, we closed right at the end, right, it looks like $77.07 per barrel for light crude. So making a bit of a push here on oil. We'll have to see if that continues to move up. And after gold took a bit of a beating, we've started to recover, but we've not been able to reclaim that 2000 area on gold. And we still have not reached the all-time high, which we got back here in March of 22. So gold, kind of curling up here along with oil. Now, Riz, obviously with everything going on, in the Strait of Hormuz right now and things like that, do you see, the price of oil continuing to increase as we go through the summer and people are continuing to travel, or do you think we're going to still kind of really be trading sideways?
This is looking bullish for sure. We do know that OPEC has extended their cuts. I mean, the last time I was on, they had said they'd extended it, but I believe, I can't remember the exact dates, but I believe even after that, they've said that they're going to extend them even further out. So I know, some of the production cuts were to be till the end of the year, Q4 and end of the year, but I think they're maybe even going into 2024. So that could definitely play into the hand of oil prices, at least per barrel, being a little bit more of a bullish scenario as we head into the end of summer months.
Fair enough. Definitely something to keep an eye on. And let's take a look here at the bond yields real quick and the strength in the US dollar. So bonds continue to keep on going, especially the 2-year, really performing well so far, especially after right about here in May. We really started to see these separate out, while the 30 and the 10-year still remain a little bit lower and much closer together as far as their yields are concerned. But yeah, these 2-year bonds really still picking up. And we've talked about this before, Riz, but does this still suggest that investors are, kind of favoring short-term investments over long-term investments?
They're more so saying, well, the bond market is different. The bond market is saying that it's expecting, I would say, a decrease in risk assets. So that could mean, equities, stock market. So that's essentially what the bond market's saying. The bond market's saying we're going to see a pullback in equities. We're going to see less risk. We might see an economic slowdown. That's the tell from the bond market, solely based on a 2-year. Whereas the stock market is pretty much the complete opposite. The stock market saying that, where it's pricing in no economic slowdown, it's pricing in no recession, it's pricing in rates that might go up next week, but perhaps eventually stay flat, like meaning not go up anymore, and maybe even get cut. So the stock market pricing in almost, I would say, euphoria, whereas the bond market's trying to price in more of a bearish and an economic slowdown type of scenario. So we have two very different, I would say, dichotomies or personalities from the individual markets. And what I will say is, more often than not, when we look back 10, 20, 30, 40 years, the bond market is usually more correct when it comes to these macro swings. And I will also say, again, this is unrelated to being correct, but it's a fact that the bond market is also bigger and larger from a notional value than the equities market.
Definitely. Now, we did see quite the pullback in the dollar here. And I know before our last webinar, we said that we're kind of looking into what is causing this big dip here, but quite the recovery, kind of bouncing off of this 100 level here and getting a pretty strong push in the dollar. Riz, did we get any idea of what was going on here with the strength of the US dollar?
I think we saw a general weakness. I mean, it was, I know there's a lot of institutions that have short bets on the dollar, on the US dollar. So, I'm not going to be able to go out and say that that's what caused the drop, but we do know that other larger currencies, we got the euro, we got the Great British Pound, all that, they did pick up, they did get a bit stronger. So as a result, in comparison to the US dollar, of course, it's going to have a negative impact from a strength standpoint from the US dollar, hence why we see this drop. It doesn't mean the US dollar is like worthless or like is yeah, definitely a little bit weaker as compared to other currencies. But of course, that was the case up until I think when was that? Wednesday, Thursday, maybe, when it started picking back up and back above the 100 mark on the index. Remember, that doesn't mean that one US dollar is, worth 101 of some currency. It's just the index, okay?
Yeah.
As a cumulative of all the other currencies.
Yeah, no, it was Wednesday. It looks like when we started picking back up here. So, yeah, definitely picking back up. Now, Riz and I have alluded to it so far. We're going to get to the big economic dates for this week. And yeah, there's a lot to talk about. But for all of our elite members who are here live, if you want to start posting your questions, now would be a great time to do it. Big catalyst this week, guys, and it is the Fed interest rate decision. This is going to be, all eyes are on this. Now, of course, we've got earnings coming in as well, so there's a lot to look at this week, but lots of big economic things happening in the back half of the week. Wednesday, we've got the interest rate decision at 2, and then Powell's going to chat about it at 2:30. You can be guaranteed the markets will move once he takes the podium. Looks like we got durable good orders, GDP growth rate quarter on quarter. That'll be an interesting one. And then we've got personal spending income and the core PCE price index month on month. So yeah, Riz, we've got some absolutely huge catalysts this week, and probably Wednesday's the biggest of them all, if you ask me.
Yeah, Wednesday, and then followed by the GDP numbers as well. So yeah, absolutely, I agree. It's going to be a big week, along with some heavy hitters also releasing earnings. So it's going to be interesting. It's tough to say. I know everyone's like, oh, okay, well, this is what's going to happen, so let's position ourselves accordingly. And sure, they can, but we, in the grand scheme of things, and if we're all being honest with ourselves, no one knows exactly how they're going to work. That's why when it comes to institutions, you name all kinds of institutions, what they do is they hedge out their risk when it comes to times like these. Why? Because there's no edge in being able to solely trade or position yourselves according to a catalyst like earnings release or Fed interest rate decision. There's no edge in playing those kinds of events. So that's why many institutions effectively hedge that risk out. Or for us, more retail traders and investors, we might want to cut risk, or and you can do that in many ways. But that's essentially my thought process leading up to this week, and why I pretty much only have one long position open, and that too is a smaller position size, and then the rest is all in cash.
Absolutely. That's one of the things that you'll come to understand. It's like you can totally nail the earnings result. You'd be like, oh, XYZ ticker is going to beat, and they do, but then they tank after that because there's so many different things going into it. No different than a Fed rate decision. So really just be careful around this time. You might be right, but the market might take it a different way than you're taking it. And in the end, you could be wrong. So definitely a good way to play it. Be a little more safe, especially during these huge catalysts. And wow, the questions have come in. I guess everyone likes our new format here on Zoom. All right, Pat wants us to take a look at ENPH Energy. I don't... ENPH? Okay, that's what I thought it was, but I couldn't remember. All right, so ENPH Energy. Let's take a look here. Kind of in a slight uptrend. We have, I'll show that for you. It's very, very slight, so nothing too major here as far as the uptrend is concerned. So really just kind of grinding upwards slowly, if you ask me. Looks like we've got earnings here on Thursday, the 27th. So that will be this week after market close. So be aware of that before taking a position. But I don't know, this thing has been beat down pretty hard here since, well, the beginning of the year, basically. Just been absolutely getting beating. Now, you could make an argument that we've found a floor down here. You could have also made the argument that we found the floor over here too, and we would have seen where that would have landed you with this earnings result. And this is exactly what I'm talking about. You could absolutely nail the earnings, say, okay, yeah, ENPH is going to beat. Looks like they beat on revenue as well, but still they got absolutely crushed in their stock price. So for me, honestly, on this one, I don't think I would personally take it either direction. I feel like it's kind of not really sure where it wants to go, especially going into earnings this week. I would hold off on that one, but that's just my opinion. Riz, kind of where are you at with this one?
Yeah, I agree. Slightly bullish, but of course that big catalyst coming in, as I said, um, the the earnings catalyst is anything goes. They could crush it, go out, and run up, or they could crush it and go down, or they could miss and go up, or miss and go down. So I don't care what anyone says. I don't care how long they've been doing this. There is no edge in earnings, playing earnings. So if you have a thesis and you feel bullish on it, you want to buy it. It's a utilities company. Then and you're like, okay, I don't care. I'm okay getting in, and I'll just go through whatever happens with earnings and carry you through that. Sure, then yeah, you can definitely consider that. But if you're not okay with that, then I would hold off because, as we know, either earnings can severely hit your trade in a negative way, or it can give it a nice boost. Which way it goes is anyone's guess.
Looks like we had a downgrade here to 2 days ago. I'm not too concerned about that. But honestly, this thing has been really choppy lately, whereas before it was, kind of a bigger mover. Really has been kind of a bit of a chop fest here, and just kind of like these short moves up and, kind of quick moves down. So yeah, this is a tricky one. All right, Jeff wants us to take a look at TOST to see if it has found a floor. I'd like to hear our thoughts. Well, that's what we're here for, to give you our thoughts. Oh boy. Okay, so we've got some movement here. What's the deal? AI exposure. Spectacular. They said the magic 2-letter word, Toast Inc. I'm guessing they're not cooking bread, if I had to guess. Based on this chart, I'm not feeling too hot about this. Obviously, we looks like we IPO'd here back in 21, and we have continued to sell off, and we really just kind of started to kind of melt up, as Riz likes to say, just very slightly. Let's get back in here a little closer to the more recent price action. This thing has been around for about 2 years now, so not a whole lot of data to look back on as far as support and resistance is concerned. I can kind of see your thesis here, where it looks like we may be hitting a bit of an inflection point. Let me draw that for you real quick. So yeah, right about there. We've bounced off of this area multiple times. You can kind of see here where we came up and hit it and rejected. Kind of same story here. Then when we gapped down on this candle here, we came back up, tapped it and rejected off of that. So if this area holds as support, and that's a really big if, you could make an argument for it. Let's see, earnings are not coming up until August. So you've got about half a month before earnings shows up. But man, I don't like this this really bearish move here from Wednesday. Though I will say it does appear to be holding this area. What are your feelings on this, Riz? I'm not too keen on it.
Yeah, this one is as a pure technical trade. Again, obviously the fundamentals aren't really there for this name, but on a technical standpoint, yeah, I think you can maybe consider a starter position, especially as we have pretty much most of the moving averages there. We have the 100 as well as the 200-day moving average just combined and kind of coming together at the 20 mark. So that could be a nice, more stronger support, I would say. So even if you take a starter and it goes lower, okay, you add a little bit. Again, I'm not telling you what to do, but that's my thought process there. And that's kind of how you want to play it if you do decide to take it.
Yeah, really good thing. Yeah, they sold off on News Catalyst. Okay. Thank you for that, Jeff. So yeah, definitely a possibility. Nothing to go, super crazy with, but something to consider. All right, looking to short Adobe at these current levels. What are our thoughts? Well, let's take a look at Adobe here. Well, I can kind of understand that. We're looking like we're overbought at this point. I will say that Adobe has been higher in the past, so don't rule this thing out as, finding the top. The top was here closer to 700. And we've been selling off since then, going into, let's see, into 2022. So real big sell-off here in 2022. 2023 has been looking more, towards the upside for Adobe. Earnings seem to be pretty good. Let's see, it looks like they reported back in June for the previous quarter, and that looked pretty good. This seems to be a little bit of a dangerous short to me, but I can see your thought process here. Obviously, we're overextended. Looks like we've kind of rejected a bit. I have a hard time shorting a big name like this, but for a short-term play, I can kind of understand where you're going at. Obviously, we have a really big inflection point right there. Yeah, we've tapped that multiple times. Giggity. Yeah, definitely a big area there. I would say if you're going to take this as a short, one, be super careful shorting something this, that seems to make earnings every time. That would indicate some, fundamental strength there. So this is not really a fundamental short. This is a technical short. So you could take it. I would take profit fairly quickly on it if you get it. And if you run anywhere past 540, it's time to abandon ship. Riz, those are my thoughts. What are yours?
Yeah, exactly.
There you go. That's the best answer you can get from Riz. He basically said, Chris, you absolutely nailed it. So we will take that any day of the week. All right, Chris, Riz, what can we take? Can we take a look rather at Amazon and Apple? Yeah, those are some pretty big names. Let's take a look at those. So Amazon, obviously our biggest online retailer out there, looks like they don't report till August 3rd, August 3rd. So you've got about a week and a half before they report. So obviously getting in now, a little bit dangerous with earnings coming in. However, Amazon has been pretty bullish here for pretty much the entire year. Since the start of 2023, you've been really pushing up hard. If you're okay holding through that earnings catalyst, I think you should be fine in the long term. But, there's definitely some downside potential here. We're very extended. Look at the distance between the moving averages, very broad. You can see that it's making that big push up. Obviously, we've got the 100 crossing back over the 200, so that's a good sign. That's a very bullish sign. Riz, what are your feelings on Amazon? I know you've traded this a lot in the past.
Yeah, I feel like because of this massive run up, I think how much has it moved since, let's say, March percentage-wise? I think,
Okay.
let's see.
You want it from March or the beginning of the year?
Go from March. Yeah, already about 41% up so far from March. I feel like anytime we get these kind of moves, doesn't mean it can't run further, obviously. I just feel like I don't want to chase this. So you didn't specify. Again, I do ask people if they can please tell me what they're thinking, right?
What direction you
I could
guys are
take a
looking
look at
at?
a lot of things, right? Like we should be over this by now. Like I could take a look at everything. But what do you mean by, what your thesis? So I'll let that slide this time around. But I feel like I wouldn't take a long here. I also wouldn't short. We got the obviously the earnings aren't this week, but the week after. And I know this is going to move alongside the market. So if we have something that reports this week, a big name, and it pukes, it can drag the index along with the Amazon down with it. So,
Or if there's like some catalyst, like, interest rates or anything like that happening this
yeah,
week.
exactly. So, that will move markets regardless. So I feel like that's not my game. That's not the kind of risk or the kind of the roulette table that I want to be at. So I would say personally, kind of just hold off, but that's my thought around Amazon.
Let's switch gears. Let's go to the mega cap, Apple. Wow, that's a run, isn't it? This looks like a pure chase if you're taking this thing long now. Let's take a look at that run, shall we? Now let's see here. Our lower point here, right at the beginning of the year, up until now, 54%. And I wouldn't short this thing either, honestly, if we're being straight. One of the things I remember when I was trading more frequently, Riz told me, he's like, dude, don't hold a short on Apple for too long. And I found him to be very correct in that thought process. So, yeah, I would be very, very careful if you're looking to short this thing for long. Obviously, we are looking kind of extended here, and we've got big catalysts coming up. Let's see, when is earnings for Apple? That's not until the 3rd of August. So again, you've got about week and a half or so to wait till that comes through. Yeah, you're right. Apple first week. Yeah, if you want to wait on Apple, I would feel a lot more comfortable with that as opposed to jumping in now. Of course, it could be very profitable for you, or it could be incredibly painful. And I think you'll find that Apple follows the S&P 500 fairly closely. Riz, what are your thoughts on Apple at this point?
Yeah, again, no long position for me. It's pretty much off of all-time highs, a little bit off of that. Plus, we have earnings the week after. It's okay to be on the sidelines with moves like these. Again, someone could come in and say, well, Riz, you're going to miss the move and, Apple to the moon, but that's fine. Everyone has an opinion. And, mine has served me well.
I think it goes to being tactical with your trades rather, and really picking your entry as opposed to trying to chase. This feels like a chase to me right now, like Riz was talking about, coming off all-time highs here a couple days ago. So yeah, that's a really tricky one to try and time. All right, Jeff says he's also considering a long on Oxy, thinking about the OPEC plus production cuts. Now that's an excellent way to ask a question. So let's take a look here on a long on Oxy. Well, obviously we have found some support here right around this 55.80-ish area. Definitely have bounced off there multiple times, but this is quite the choppy stock. I mean, look at the moves on this thing. It's up and down, and tails are pretty thick in some spots for sure. But it does look like we are starting to grind up. We've pushed up over the 100 moving average here. We're kind of holding above that pretty well so far. Let's see, we got earnings here. Looks like first week of August. So that's one to keep an eye on. Like we said, guys, lots of earnings coming up. But I mean, you could definitely see a push here towards the 200. So, I mean, if you're feeling this and you've got a good thesis behind it and you believe in it, I feel like a starter long position here is not a terrible spot. Riz, if you were going to trade this, how would you look at it?
Yeah, well, good question. We did trade this 2 weeks ago and we made money on it. So we got out. I'm glad I got out. Again, like I said, more often than not, I am right. Statistics actually show for the year to date, I am 77.1% right. There's that specific data point there for you. And of course, elite members can verify that. So for me, I feel like because I've already gotten in and got out, doesn't mean it can't run anymore, but we closed for profit. I don't like to re-enter a trade too soon again. But if you are looking to get into this, Jeff, as you said, yeah, you have my blessing because, as you said, oil is kind of looking a little bit more bullish, of course, with the OPEC cuts being sustained for longer. Also, the trend looks up as well. We know fundamentally these oil companies, oil producers have done really well the last few years. They've really bolstered their balance sheets and obviously increased their profits recurringly for the last 2-3 years. So that can definitely play into the hand of the tech, not tech, but the technicals here as well. So I think whether you take a starter or whether you take a half a position, I think it sounds good. And then see if you can run it up to the 62, 63 area.
Yeah, I think that feels like a pretty safe run there. Obviously, yeah, if we make that run to the 200 simple moving average, just be aware of that. I would definitely consider taking profit there if you do decide to take this one long. All right, R wants us to take a look at a couple tickers. SWBI. Okay, well, lock and load, gentlemen. We're taking a look at Smith & Wesson. Okay, so let me give you some insight on this. From a standpoint, if you don't know this, I actually write for an ammunition company. So dealing with names like this is definitely something I'm familiar with. But let's just take a look here at Smith & Wesson brands over the past couple of years. Not so good, but I will say we are starting to grind back up here, starting in about this year. Basically, we've really started to kind of push up on Smith & Wesson. Me personally, I'm not a huge Smith & Wesson fan, but that's me talking as a shooter and not necessarily as a trader. So let's take a look here. So far this year, Smith & Wesson has increased about 55%. Now, this is a very slow moving stock. I will say, though, we are going to be coming into an election cycle next year. That always bodes well for gun companies, but doesn't necessarily always bode well for their stocks. So me personally, this is an incredibly slow moving stock that likes to kind of, grind up and grind down. Looks like we had a big push here in June post earnings. So that obviously went well. Earnings are not going to be coming here again until September for Smith & Wesson. So, I mean, for me, this isn't a stock that I would trade personally, but if you're in it for the long haul, I think you're going to be okay. So long as, there is no, let's just say, oppressive legislation pass. And I don't think that that's going to happen. Riz, I know you typically don't trade gun stocks, but what's your take on Smith & Wesson here?
Yeah, so double tap the right-hand side y-axis, and then you'll get a better idea. Well, just where the numbers are, double tap it, yeah. And then there you go. So we get a better idea. It actually is a big mover. I will correct you on that, Chris.
Okay, fair enough.
It's because when you have the chart squeezed lower,
Yeah, I had it zoomed
it's
out.
logarithmic. So it is a big mover. It's definitely been a bullish run for this 55% or so year to date. So for those that have been paying attention throughout the webinar, this is a sizable 50% gain year to date, right from start of January, as you mentioned, Chris. So a big mover, obviously it has periods of consolidation. Yeah, usually election years are volatile. And of course, if we look at historically, not that much really happens with gun reform, or I would say firearm reform and anything. So I don't see that changing. I don't think that will change regardless of what happens with the election in 2024. There will be a lot of talk, but other than that, that's about it. From a technical standpoint, it does look good. At least it's holding the 1270 above 1250. I would, if you take a long on this, I would have a stop. Again, I don't know what kind of trader you are specifically, but I would have sort of a stop maybe at 1250, and then have a target of 13 and then 1350, kind of at that resistance point as profit target too. So again, I kind of laid out the trade for you, whoever you are. If you didn't say your names. Yeah, I'm gonna let that slide. Yeah, that's kind of my trade thesis for you there. Have a stop. I would not feel comfortable holding this as if it dips below 1250, because we've seen that once this thing rolls over, it just kind of keeps trickling lower, and you don't want to be bag holding that, especially something that's very, very niche, and I would say very, very prone to news cycle headline volatility, as all gun manufacturers are. So that's my take from a trading and investing standpoint.
Fair enough. All right, so we got one more, TENB. Tenable Holdings. This one I am not too familiar with. I don't know this ticker too well. It looks like we've been rather bullish here going through May. We've been really pushing up pretty hard on this. Looks like earnings is Tuesday, so I'd be very careful about taking a position on that. I mean, we do seem to be holding over the 100 moving average here, and that does appear to be giving us some support. So, I mean, I would wait until after earnings before I would make a decision on this ticker. I think with it being so proximate to earnings, that's really not the best time to be jumping in. But Riz, do you know more about Tenable Holdings than I do?
No, I do not, but let's see. Can you click that top right button that will expand the yeah, so what is it? It's a tech company. All right, so we got some earnings coming up. We see that they usually beat. Okay. All right. Yeah, so from a technical standpoint, I agree. Kind of consolidating. We got the earnings catalyst coming up. It's a tech company. It's obviously on the NASDAQ, but I haven't actually traded this. It's not really on my watch. So that's definitely a new name, so to speak. But again, I would personally kind of just hold off. I would personally, and Nicole comes in, he's in the comments section here. He said it's a tech company with some vulnerabilities, management focused. So, okay, whatever. I'm not really sure. Maybe it's IT, cybersecurity type thing.
Sounds like cybersecurity to me.
Maybe, but yeah, interesting nonetheless. I would wait personally, unless you are really confident in your thesis and you feel like regardless of what happened with earnings, you're willing to play that catalyst and ride it through, then by all means, because it does look good that it's holding this 40 above 42, right? And as Chris said, that 100-day moving average is right there at 42 as well.
Yeah, I would just say be careful of this 44 area. We've had multiple taps there, and we have not been able to breach over that and hold. So, I mean, a fairly bullish sign would obviously be a push over 44 and a hold there above it, meaning that we close above 44. It could definitely signal a change in direction. But yeah, like Riz was talking about, really just kind of consolidating and kind of chopping around here going into earnings. But of course, earnings does not care about that sort of thing. So, wow, great questions tonight. Thank you, everybody, for coming. I hope you enjoyed our new format here on Zoom. For everybody who is here live, I definitely enjoyed the engagement. Riz, obviously, we talked about some big names that are going to be reporting this week. Is there anything that you're keeping an eye on this week, just to kind of close things out?
Yeah, I'm glad you asked. So I will kind of go over quickly, do like a really speed run of kind of what I'm looking at. So we got Tuesday, we got 3M, so triple M there. Wink, wink. I'm not going to say why. That's important for us, right? Elite members know. It's kind of obvious, but we also have again, I'm not too interested in it, but it is another one that's coming up. It's Spotify Spot. Um, we know this name has had a massive run as well this year, along with pretty much all growth names in tech. Another one we have Tuesday after closing. These are obviously not going to surprise anyone. Is Microsoft. Huge name, massive company, fantastic company, also with a great run start of the year. A little bit of a pullback the last week, but there's a big, obviously a big question mark that is pretty much almost resolved, and that is the Activision acquisition. They did delay kind of the complete takeover to October. It was expected to happen, I believe, last week. So that kind of put a little bit of a damper on things, but it seems to have gone through pretty much all regulatory hurdles. Microsoft, after a long wait and long, tough regulatory kind of process across different continents, has been able to really push this through and get the approval of everyone from a regulatory standpoint. So that will be going through, and it'll be interesting to see what they mention about that. But of course, it all comes down to their overall numbers. Another one is Alphabet, Google, right? GOOG, another fantastic company, has had a good run up, obviously a little bit more choppy and a little bit more volatile than the other names like Amazon and Microsoft and Apple, but it's definitely kind of bounced off that 128 resistance. I'm looking a little bit bearish from last week, but again, earnings, who knows? They could crush it and absolutely recover. So again, another fantastic company that I really like. We have Visa, just obviously a big payment processor, very solid company for long-term holds, has a nice run as well, even before the start of the year. And again, this one can go anywhere. Leading us into Wednesday, we have quite a few companies again, but the biggest one in my view is Meta. After close on Wednesday, has a tremendous run, amazing run. Oh man, this one used to, I remember back in October last year and then November, people were like, this company's going bankrupt, it's over, Zuckerberg lost the plot, and he kind of did at that point. But man, does this represent a massive comeback of epic proportions and very vindicating for Zuckerberg. Of course, when you have an amazing cash flowing business with next to no debt, you can get away with some missteps. You can get away with making some, I would say, strategic errors and specifically the metaverse stuff. But boy, oh boy, was this, I would say, the highlight of the year so far from a large cap growth standpoint, recovery standpoint. Thursday, we got good old McDonald's, before open. This is another one, absolutely crushing it. Everyone's got to have McDonald's, whether the economy goes up, down, sideways, nowhere implodes, people still got to have McDonald's. So again, another fantastic name, not a growth company, but still done very well. And it'll be interesting to see how they do. To end off the week, we have Intel again Thursday after close, and it will be interesting to see how they do. Kind of an underperformer from the semiconductor chipset standpoint, completely getting, I would say, outperformed and from the likes of AMD and NVIDIA. But we also have Exxon on Friday morning, XOM, and yeah, another oil producer, right? Consolidating. And last but not least, what's also interesting to me is P&G. So PG, Procter and Gamble. Again, another company that doesn't really matter. It's consumer staple. It doesn't matter what's happening. We're all going to need to buy soap, shampoo. What else do they make? Toothpaste, detergent. You
all
name
the
it,
important
right?
things.
Yeah, all the stuff that we need and use may not like to spend money on, but it's a staple. You got to get it. So um yeah, it's going to be interesting. So we're going to get a better understanding of the overall climate the more companies report. So far it's actually been pretty good. I can tell you from the first major week for earnings, it's been pretty good so far. Not it hasn't been like a complete wash in regards to revenues and profits for companies. So that tells us, of course, the economy is still strong. That kind of, I would say, further bolsters that viewpoint that the economy is still strong. These companies are still doing well. They still have some growth. They're still, obviously, the profitable ones are continuing to make more profits. But this week going to be a further indication and give us an even better view into that.
Awesome. Riz, thank you so much for your insights and your market knowledge. It's really awesome having you here on webinar. And of course, thanks to all of our elite members who came out live for this one. Really appreciate all of your continued support, amazing questions, and just growing as a trader. And that's what we want. We want you all to grow and to gain that financial independence. That's why we're here. That's what we're trying to do. And we're glad to do it and be in this journey with you together. Thank you, everybody, for coming out. And like I said, special thanks to Riz for being here. It's always great having you on webinar, buddy.
Pleasure is mine. Thank you, Chris. Again, I'm liking the Zoom format. Hopefully everything goes well in terms of the recording and getting it up on good old YouTube. But so far, so good. For those of you that attended live, let me know after this ends in the chat room, in our elite chat room, what you thought about it. Like it better than the good old regular click meeting format, or prefer this. Again, we'll decide eventually how it is from our standpoint, from a recording and uploading standpoint. But thought I'd try this and see if you guys prefer it or not.
Definitely. And if you're here on the replay on YouTube, please leave us a comment. Let us know what you're watching for earnings this week and what you guys like or don't like in these big name companies that are going to report. And we will see you in the market on Monday.